Okay, okay, I had to come back. My other location was not a good location. I was trying to do this video outside, and it was actually cold and too many people walking by. So we're doing it in my home. And so I'm doing the video all over again. Hello, I'm here today. I'm going to give you guys about 12 questions to ask your loan officer. Um, since I've been on Clubhouse and since I've been doing these videos, I've had people ask me to write down or give some questions that they could ask the loan officer so they can know if that loan officer is a good fit for them. So that's what I'm going to do today. So again, I am Jackie Braden, VP of Nation Mac, where we are taking mortgage professionals such as mortgage branch owners, also real estate brokers, mortgage brokers, and top producing loan officers and turning them into mortgage branches. We do that in 30 days. There's no cost, no reserves to do so. It is a way to get in-house financing as well as scale your production and also the income. So besides that, I would like for you guys to check out my jewelry collection, which is Ja Jewelry on jajewelry.myshopify.com. And I'm wearing my Tavy earrings and my necklace plate, and I have some more pieces that are in works, so I can't wait to release those on my website. And my website is actually getting a makeover right now, so I'm excited about launching the new website. So you guys will enjoy that. So I came in the house again. It was cold outside, and my fingers are still cold. But I'm gonna do my video in here. Again, I'm just gonna give you guys some questions that you can ask your loan officer, so that again you can know, is this a loan officer that's good for me? Because not everybody is a good fit, so you want to know. So the first question I suggest that you guys would ask is, are you a registered or licensed loan officer? In a previous video, I did do a video, of course, telling you guys what the difference is. So I'm not going to go into details about the difference between a registered loan officer and a licensed loan officer, but I will let you know when you ask them that question, it will give you an idea of their education and where they even work. Registered loan officers typically do work at depository banks. So banks like Bank of America, Wells Fargo, Chase, they will be limited with the loan programs that is at that bank, of course. So any products or programs outside of that bank, they won't have. They won't have non QM products either in those types of institutions. When you go to a direct lender, such as myself, we have an array of loan programs. We're not limited to only Bank of America, only certain products. So that's also what separates a registered loan and a licensed loan officer, because a registered loan officer works for the bank. And again, when they are no longer working for that bank, they are no longer a loan officer. So you want to know. And outside of that, I'm not saying that going to depository banks, your local bank, is a bad thing. You know, the local banks are there to help the community grow and help, people get home mortgages. But a lot of times, some of those types of institutions have stricter guidelines. So I'm not saying they may deny your loans more often, but their guidelines are stricter. So you want to keep that in mind. The second question that I would have you guys ask a potential loan officer that you may work with would be, can you give me a loan quote on a loan estimate, or do you give it on a loan summary? Not every lender give it on a loan estimate, and I do suggest that you guys get your loan quotes on a loan estimate. And the reason for that is the loan estimate will force the lender to disclose all the fees. If they put it on a loan summary, the loan summary will say in small print that there are fees that are subject to change, and this is not a loan estimate. So if it's telling you that, you should just bypass it and just get it on a loan estimate. I had one girl ask me, what is a loan quote? So just simply giving you the details about what your loan could look like, the interest rate, how much of a loan you could afford, and also you'll know your DTI, where your debt to income ratio would be if they do their due diligence. So you want to know your loan quote, and you can get that on a loan estimate. It's a little more work, a little more people do get involved when you have to get on a loan estimate, but oh well, just get on a loan estimate. Again, the loan summaries are not official documents. So if you go to my other video where I discuss the difference between the two, you'll know why it's important to get it on a loan estimate. I'm not going to get into details. Third question. Can you give my loan quote without running my credit? And the answer should be yes. You do not have to get your credit ran, and I suggest you do not, especially when you do not know exactly who your lender would be and you want to compare, because the first person you go to may not be giving you the lowest interest rate. How do you know? You go to one loan officer and you get a quote and they tell you what the interest rate, but you don't compare it to another lender. How do you know if you're getting the best deal? Again, do not let them run your credit. They can tell you your loan quote without running your credit around. You could tell them what your credit scores are, and based on that, we can then quote you. Okay. The fourth question I think we're on. 1, 2, 3. Yeah. So we did the loan quote, the credit. Okay. You also want to ask them, when you do the loan quote, and I'm ready for, loan quote is a quote, okay? But let's just say you're ready to move forward and you're like, okay, cool, I'm gonna go with this particular lender. When they give you the pre-approval, will they give you that pre-approval? Is it considered a loan qualification letter or an actual pre-approval? Because there's a difference. If your loan officer is not running your loan scenario through the deal system, okay, the desktop originated, which is an automated system, as a loan officer I can do that, and I want to do that because that means that I've done my vetting as much as I can on my end. So if I've done my vetting, LTV, which is loan to value, DTI, which is debt to income, that stuff shouldn't cause an issue at the end of the process. And a lot of times stuff like that pop up if they're not checking in the beginning. So it's very important to know when you get that pre-approval letter, is it really a pre-approval letter? Because it could just be simply a pre-qualification letter. If they didn't go any deeper than saying, okay, cool, let me give you a letter. Oh, okay, here, you can afford this. Like, you want your loan scenario ran through the system. You want it ran through the DO system, okay? Very, very important. And I want to tell you guys something. And this is, I don't know why, but not all loan officers know how to run the DO. I mean, I said it. I don't know if that's a secret in the industry, but there, boom, I said it. Because I know a loan officer that just learned last year, and he's been in the business for 20 years, and I'm trying to understand how do you not? Again, I'm not calling people lazy. I think that sometimes loan officers may or may not have permission to do certain things. Again, in one of my videos, I talked about call center loan officers, right? So if you have your license as a loan officer, but you are a call center loan officer, there's a difference. That call center loan officer may not have permission to run DO, may not have permission to do certain things that I can do. So you need to know if they run your loan scenario through the automated system, the automated underwriting system. And I'm going to show y'all something because I wanted to print and show you guys this. I did this on purpose. Okay, so let me show y'all the difference. And I blotted everything out so you don't see the personal information. This is this says pre-credit, pre-approval, right? But to give you this, I don't have to run you through the system. It's just a quick little letter. You can kind of see, right? Kind of give you a little, it tells you the loan amount, it tells you the interest rate, it tells you what type of loan, it tells you the date. It lets you know it's a lender myself. I have my license and everything on here, but this don't hold any weight. Look at this one little page, right, that you may get compared to this. This is when I run your loan scenario through our automated system, through the DO, right? Now, let me show you the difference. Now, this is also breaking down, yes, it's still breaking down the loan and all of that, right? But it's giving more information. It's not telling you just the loan amount. It's telling the LTV now, breaking down the debt to income. So when you take this to a seller and you're getting ready to put your offer in on a home, this is stronger than this. What is this? It barely gives you any information. But when the seller sees this, when they see this, they can see clearly, okay, this person, and then it's going to say approve eligible, right? Approve eligible. This don't say that, but this lets you know LTV, DTI, it tells you the loan amount, it tells you more information. It breaks down already the risk, what's still needed, certain findings. It breaks down, it gives you the employment and income. It's more detailed. So when the seller sees the desktop underwriter letter, this findings, then they feel more confident with this particular buyer because nothing's hidden. Everything is here. Let me tell you what else it tells you, which I absolutely love. I marked it, but here. This is what they love. It tells credit scores. It tells, and I have all the names blocked out. It tells, it gives the bank, once we source the money, it does not give the bank account number. So don't feel like the seller get your personal information. Your social security number is not on here, okay? Your bank account number is not on here. They will see the amount of money you have in your account, but you want them to see that because, again, you're trying to beat out the next person who's putting the offer in on the house. You're showing them, hey, I'm serious. I have my money. Look, here's my pre-approval letter, a real one. It's been ran through the system. It's a desktop underwriter type of conditional pre-approval, because this even lets you know some of the conditions that I already have to conquer and settle, before we can completely get approved, right? So it tells the monthly income. It also share, again, the balance of the bank account and where that down payment and stuff is coming from. What else does it say? It doesn't give the address because we don't have an address at this point, but this is stronger than the other letter that I just showed you. So let me show y'all this right here. Yeah, so it basically just break all of that down. The qualification ratios, everything. And then at the very end, what you want to see is this, what I circled right here, which is approved and eligible. Not approved ineligible, approved eligible. So when you take this to the seller, your agent take this DO pre-approved letter, you would get chosen to buy that house over this. Okay? So y'all need to see the difference. And I'm like, let me just show y'all the difference. You want to go and buy your home with this or with this, where you're being open and you're showing that seller, look, I'm serious about buying your home. Matter of fact, I've already seriously been pre-approved. Look, my DTI is meeting the guidelines. My LTV, my everything is here, So just wanted to really point this out. This is why it's so important for loan officers to run the DO, and they all don't do it. Again, I'm not calling them lazy. I'm just saying some of them may not know how. Some of them may not have gotten trained on how to do it. Some of them may not have permission to do it because whatever, maybe their lender don't allow them to do it. I don't want to just say it's only one reason why they don't do it, but I can tell you this. I was on Clubhouse, I think about a week and a half ago. I was doing a room and I'm on the stage with other lenders, and two of them from two different lenders were boasting. I just found this interesting. They were boasting about not running the DO. And I'm like, why would you not run a DO? You're a loan officer. That's just what we're supposed to do. That's you doing the best that you could possibly do to qualify this person before you send them out, before you open and continue the loan process, right? Before you, again, open escrow and do all of that. I'm doing the best that I can in the very beginning by doing my vetting, right? This is before you know what house you're going to get. This is before escrow is opened. You do the best that you can before to avoid anything that could pop up later and then your loan fall out. So anyways, these two guys were happy that they don't do DO. And he even incorrectly said, oh, because I don't do DO because you got to be very careful about the Privacy Act. And I'm thinking to myself, no, none of that's on there. He thought that the Social Security number was on there. It's not. He thought that the full bank account number was on there. It's not. So again, I knew from what they were saying that they just either don't have permission to do so, or they just don't know how, or they are a call center loan officer. Period. They just don't know how to do what other loan officers know how to do. But you want that. You really want that instead of a pre-qualification letter, or instead of a letter that's just saying loan amount, interest rate, and the date that it was ran. That's not enough, okay? I don't know what number I'm on, but okay, number 5. 1, 2, 3, 4, 5. So the next one, what loan products? You want to know if your loan officer have a variety of loan products. Do you have qualified mortgage products and non-qualified mortgage products? The non-qualified mortgage programs are like your bank statement programs, your asset depletion programs, your 1099 programs, your foreign national programs, all those other alternative type of loan products. You want to know that, because what if you write off a lot of your income, right? I have a lady who's a nurse. She makes crazy money a year. She's like almost $100,000 a year. But the way that they pay her, it's like they pay her. No, they reimburse her. So the way that they do it is weird, because she's a traveling nurse, but that money is written off, right? So although she may be making $100,000 a year, on her tax returns, it doesn't show that. It shows that she made like $20,000, and she couldn't buy a home with $20,000. So if I'm a loan officer and I only have qualified mortgages, that means that you have to be full documentation, basically. And if you're full documentation and you don't prove or show on your tax returns that you make the money, it's nothing I can do about it. Sorry, I have to use the tax returns. And even though your pay stubs, and that's the thing, her pay stubs show she earned the money she makes. Clearly, she's making $30, $40 an hour, but we don't go off the pay stubs only, because once we get those tax returns, if you wrote your money off, then we can't, well, you can, but you're going to be very limited on how much of a loan you can afford. So that's the difference in having a loan officer who have qualified mortgages and non-qualified mortgages. Because when the client with that scenario come to me, automatically I know, okay, cool, I can't take you full docs, but I have a bank statement program, I have an asset depletion program, I have all these other programs that won't look at your tax returns. And that's what you need, especially if you have a special kind of lending scenario that's not a full documentation. Full documentation would be last 2 most recent pay stubs. It would be the last 2 months bank statements. It would be the last 2 years of your W-2s or 1099s, and also the last 2 years of your tax returns. As a wage earner, for instance, you don't have to even have your last 2 years tax returns. I can use your last 2 years W-2s. But if you are self-employed, then I need to have your tax returns. So that's the difference in a loan officer who have QM products and non-QM products. Either you have to be full docs and they can help you, or they're going to be very limited if you don't come with all of your lending documentations, your income documentations. So the next one, I would say number 6, you want to ask them, okay, non-QM, QM, right? Then you also have private money and in hard money. Okay? You need to ask them, do you, your lender, have private and even hard money? Because we do, okay? And not all lenders do. Because if they don't, sometimes, and you have to ask them this too, that's the follow-up question. So you want to know, do you have private, do you have hard money? Just in case, whatever, if none of these options work for me, then maybe I need to go private money, or maybe I need to go hard money. Sometimes, if they do, then great. You don't have to go anywhere else. That loan officer can help you. But if they don't, sometimes their lender may not allow them to go outside of the products that are in-house, which means that they may have to, send you or work with another loan officer who could help you. So you want to know that. You want to know if you do have private and hard money, is it in-house or do you have to source it out? So that's another question. That'd be number 7. Number 8, let's see. I did write these down because sometimes I forget. Okay. You want to ask your loan officer, do you have a specialty? Okay. It's just, everybody is different. Everybody run their business. As loan officers, licensed loan officers, we're independent contractors. Okay. We're 1099. So if we're 1099, that means I'm running my own business. So how I run my business may be different from how the next loan officer run his business. Okay, how I educate myself with the guidelines, how I stay on top of whatever's happening with the business and the industry and the markets and all that may be different for the next person. So with that said, not every loan officer know how to do everything. And do not be fooled by loan officers that like to boast. I've been in the business for 20 years, 30 years, 20. So what? It don't mean they know everything. It doesn't mean that they stand on top of the education, or it doesn't mean anything, because again, I know a couple of loan officers that's been in this business for a while, and I know one that didn't know how to run the DO until last year, after 20 something years. And again, there are some loan officers who have specialties. So maybe a loan officer only really work with like a lot of VA loans. So they're going to know that VA loan product in and out, maybe better than some others. But if that's their target and that's their market that they're focusing on, they may not be familiar with other products like the bank statement programs or the asset depletion programs. They may not want to work with people who need down payment assistance, and we kind of have a discretion. We can choose to work with loan programs that we choose to work with. Not that we're choosing to work with certain people or not. It's the product, it's the program that a loan officer may choose to favor more than others. So you want to know that. Ask your loan officer, do you have a specialty? There are some loan officers that may only do reverse mortgages. Like I haven't done a reverse mortgage. We have that product. I just haven't done one yet. I'm not marketing to elderly people. You have some people that target market. So if they're target marketing, they may only prefer those loan programs. So you want to know that. If you get a loan officer, oh no, we have all programs, all of them, I work with them, not a problem. Okay, great. But you want to know if a person favor maybe conventional loans over dealing with FHA loans, or again, dealing with down payment assistance programs, because that I'm doing that right now. That's more steps. It is more work, and not everybody may want to take time to, go through those necessary steps. Some people may want to deal with clients who got their 20% down, they're ready to roll, they're ready to go, everything's ready. They don't have to worry about helping them find this money or do that or what, it's their discretion. Again, we're running our own business. So however that loan officer may choose to operate in their business, we can't tell them how to do it. You just want to know how they do it. So outside of asking them if they have a specialty, which is really good because it'll kind of let you know, okay, this person is very versed in all the different products. Okay, they may know, and I don't know, maybe it's an old way of thinking, because when I first got into the business, I do remember when I was going to open houses, and some of the agents that I was introducing myself to would ask me, well, what's your specialty? And I'm thinking, why would I have a specialty when I have all of these loan programs? That's dumb. Like, why would I focus on one product when I have all these products? So now I'm missing money over here because I'm only focusing over there. That makes no sense. So I would tell them I don't have a specialty. We have all of these products and they're all available. So no matter what your client, no matter what kind of client you may have, whatever type of that loan scenario is, most likely I can help them because I have all these different products that I am using. I'm not gonna not use it. If your lender have different programs, learn those programs, use those programs. So I think that's a very good question to ask your loan officer for sure. And the next question you want to ask them is, do they give lender credit? We have the ability to give lender credit, but you know what I found out? Maybe not all loan officers can just do it right off the bat. Maybe they have to get permission, because again, maybe they have certain restrictions, but your lender credit comes from the interest rate. So anytime you want a lender credit, best believe you're getting it from the rate. So for me, when I'm quoting my clients, I let them know, you have to let me know up front if you need lender credit. And I'm already asking at the very beginning, so I can already know. If they need lender credit, that just simply means I have to find money in the rate for them. And I let them know that either you're gonna get the lowest interest rate that I can quote you, and that's fine. But if you need help with your closing cost, then I have to find the money in the rate, which means I have to go up in the rate to find that money. So the bottom that I can give you, or if I need to go up a few point, or a few, a half a point or whatever, a quarter of a point, if it's money to help you, I'll find it. So you want to ask them, can they give you a lender credit? And would they give you a lender credit? Okay. And that's good to know. And again, you have to be flexible with the interest rate too when we are given that lender credit, because we find that money from the rate. You want to ask also the next question. I'm not sure what number I'm on, but you want to ask them what is the best form of communication? Okay, because we're all different. Some loan officers, you cannot get them on the phone. They're not going to talk to you on the phone, period. It just may be through an email. And I've heard a lot of people say that. A lot of people complain about not being able to contact their loan officer. You should ask that question in the beginning though. Ask them, what's your form of communication? That way you already know, okay, so I'm not disappointed when I'm constantly calling. I'll know I have to text this loan officer. That's the best form of communication. Or I have to email this loan officer, or I have to call this loan officer. And you want to ask them, what is your response time? Is it 24 hours, 48 hours? How long does it take for you to get back to me? Ask them in the beginning, because it shouldn't take that long, especially if we have 30 days to close, because I'm going to need to stay in constant communication to get this loan moving. I should always be in communication, but everybody's different. But that's definitely a great question to ask them. And then you'll kind of know what kind of loan officer you're dealing with too. If they letting you know, hey, you can't really reach me, so don't be, calling my phone. Only text me or only email. You want to know that. You also want to know the next question. How often should I expect to be updated on my loan? Or how often do you speak to your clients, let's say on a weekly basis? If we have 30 days to get this loan done, that's 4 weeks. You can ask them in that 4 weeks about how often do you talk to your clients, on a weekly basis. Just see what they say. Just see, because some of them may say often, some may say not often. For me, I call all my clients that are in my pipeline, not potential clients, not clients that I talk to and I'm waiting for stuff. People who are already in my pipeline that we are moving forward. I have a system, and you will hear from me at least twice a week. On Mondays, I'm always calling everybody. I need to know what you did last weekend. I need to know who you talked to, what's going on in your life, what happened. Did somebody say that they had an interest rate lower than yours? Because I need to know. I need to know what kind of conversation you had. And so I'm going to stay on top of you on every Monday so I can know what happened over the weekend, okay? So for me, you're going to talk to me, I'm not saying only 2 times a week, but minimum minimum about 2 times a week when I'm going through my loans, because I like to stay in contact and in communication. I also like you guys to know what's going on so you're not guessing what's happening with your loan and where you are. You should never be not in the know. And too many times I hear people just like, I don't know, I haven't talked to my loan officer in about a week or two. Well, last time I talked to them, I was just waiting. I'm like, that's just so odd. I don't understand how that happens. How do you not know what's going on? How has 2 or 3 weeks passed and you haven't even talked to your loan officer? That makes no sense to me, but it happens. And if you ask these questions in the beginning, perhaps you can avoid those type of loan officers. Still, I don't know what number we're on. The next one is, what are your work hours? You want to know what are their work hours, because you kind of get an idea what kind of loan officer that is, right? If they say, oh, banking hours, well, number one, it could just simply mean that they really are saying that they work at a depository bank and they really can't work on your loan because their desktop, the computer, everything is at the branch, at that bank. And so when the doors are locked, they cannot work on your loan. And that's the difference. If you're doing a depository type of bank, you're dealing with banking hours, okay? Now go to a direct lender, it's a little different. It could be because perhaps that loan officer may still choose to run their business during banking hours, and you want to know that because that means that after banking hours you can't reach them. You can't expect for them to call you back. So you do want to ask that question: what are your work hours? Okay. Once you know their work hours, it'll give you an idea. I don't even know. I mean, I clock in and out, but I don't have any work. What are my work hours? I don't have work hours. I mean, I'm working all the time. I mean, I done woke up out of my sleep working. I done woke up, popped up, forgot I had to do something to be in the middle of the night. I didn't answer the phone at midnight before. I need to stop that. But I'm just saying, I'm a little different. Everybody's not the same. Don't call me at midnight, though. That does not mean, please don't call me at midnight. But I'm just saying, like, for me, I don't turn it off, So you want to know that, okay? Outside of knowing their banking hours or when they work, their hours, you want to know, do they work on the weekends? So if they're not working at a depository bank, cool. They work for a direct lender, cool. But do you work on the weekends? Because not all of them may work on the weekends. I do. I don't know why they wouldn't. I mean, besides my other departments, they don't work on the weekends, but I can still do certain things. I can still quote you. I can still, talk with you and just get your scenario and assess your situation. I may not be able to get the loan estimate because that requires my other department. I may not be able to do that on the weekends, but I work on the weekends. So you want to know if your loan officer can be reached, okay? I think you need to know the business hours that they are in. You want to know if you can reach them after business hours. And you want to know how often they converse with their clients. I stopped counting, I think after 1 or 2. So I don't know how many questions that was. When I watch it back, I'll figure it out. I think it was about 12, maybe, questions. But I think that should help you guys. It's personable too. So when you're sitting in front of a loan officer, the key is to get that vibe with that loan officer. If y'all click well, if the personality is going to work for you, because my personality may not work for everybody. I'm cool with that. Maybe people prefer a different type of personality. So the more you speak to that loan officer, the more questions you ask, the more you'll get a feel for if they are a good fit for you. So I think that's it. That's all I want to do. I think there's about 12 questions. I always try to do these videos short, but then I start adding more words. I talk too much, but I think that's good enough. Until the next video, hope that helped you guys. About 12 questions you can ask your loan officer so you can know if that loan officer is going to be a good fit for you. And honestly, a hard-working loan officer never stop working. Just want to let y'all know that, okay? Because we're not going to miss out on the chance of helping you guys. And so that's how I feel. But everybody run their business different. So check out my jewelry collection, jewelry.myshopify.com. And if you know any real estate brokers, mortgage brokers, branch managers, and top producing loan officers. Send them my way. 714-417-9895. I can turn them into a mortgage branch that will help them scale their production and scale their income. And it's just a win-win situation if they so choose to take advantage of this opportunity. So until next time, thank you guys for stopping by. I've had quite a few people come through. I stopped reading the questions and your comments because that back and forth was too much. And look, I'll just answer, or you can leave those questions under the comments and I'll be sure to answer. Okay? Thank you.